Good morning and welcome to Morning Trade with Moneycontrol in association with M-Stock by Mirai Asset. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable trading strategies, sectoral trends, and most importantly, your queries during the course of the show. So guys, keep commenting on our live feed and we'll have it addressed by our technical analyst on the show. But before we bring him on board, let's see what the global handover looks like. Pretty weak, I would say. European stocks closed lower after the ECB meeting. US inflation shock. Stock 600 ended the day down with 2.7% on Friday, with banks shedding 4.9% to lead losses as all sectors and major bourses closed in the negative territory. The ECB on Thursday confirmed its intention to hike interest rates by 25 basis points at its July meeting, with a further hike expected in September, the scale of which will be determined by medium-term inflation outlook. The central bank also raised its inflation expectations for the Eurozone significantly and downgraded its growth forecasts. Now on Wall Street, stocks dropped sharply on Friday after a highly anticipated inflation report showed a faster than expected rise in prices and consumer sentiment hit a record low. Dow Jones shed 80 points, S&P 500 fell nearly 3%, Nasdaq Composite sank 3.5%, and with Friday's decline, Wall Street suffered its worst week in months. Dow fell 4.6% for its 10th down week in the past 11. S&P 500 and Nasdaq lost 5.1% and 5.6% respectively for their 9th losing week in 10 and the worst week since January. Markets, meanwhile, across Asia Pacific tumble. Tech stocks lead the fall with Japan, South Korea and Hong Kong slipping more than 2%. For our own markets, SGX Nifty indicates a sharply lower opening today. Alright, but before we talk technicals, let's talk about the fundamentals, especially with banking stocks in the radar. We're joined by Neha Dave of MC Pro. She tracks the banking and financial space very closely. And Neha, I think we all read that interview that was done by Bloomberg with Mr. Dinesh Khara of SBI. The chief of India's largest lender is quite optimistic about the pickup in demand. But let's talk about the overall banking space. What are the big trends we're looking at right now, given the macroeconomic scenario?
Yes, so while the overall market sentiment is very weak and that would have an impact on banking stocks performance, the fundamental of the sector is very strong. Now, this is despite the rate hikes done by the RBI, and there could be more in the offing given the high inflation. The reason primarily being, first is that the banking, almost all private banks, the larger banks have announced the rate hike. They have passed on the increase in the rate by RBI. They have increased the marginal, the MCLR rate. Now, most of these banks, their loan book, more than 70% would be on a floating basis where it is linked to some external benchmark. So the loan book will get repriced immediately. At the same time, if we look at the composition of the larger banks, the deposit profile is very strong. Around 50% on an average would be the CASA deposits, which would not increase with the increase in the interest rates. So the scenario of rising interest rate would in fact support margins going forward in the next couple of quarters. Now, that is on the rate hike side. If we look at the other broad picture, that is loan growth. The loan growth has been very encouraging. It has touched double digit. Now, this is despite there are the talks of capex getting delayed because of the high interest rates and higher inflation. But what has happened is there has been an increase in the working capital demand and the working capital related loans. So the top line of the banks should also look good. And if you look at how the bank earnings have panned out in the last quarter, in fact, banks significantly contributed to the Nifty earnings. Obviously, that is because also of the high weightage of financial sector in the Nifty, but also because the earnings were very strong. And the earnings in the fourth quarter were mainly driven by a very good asset quality performance. The trend in the banking sector on asset quality front, if we talk about, the slippages are declining. The restructured book is contained. Gross NPA ratios have been downtrending. And as a result, the credit cost has declined significantly for most banks, driving the earnings. Now, going forward, also the credit cost is likely to remain low. At the same time, there will be a top line growth. margins would be supported because of the MCLR hike that banks have announced, and this should support the bank's earnings. The only concern could be the other income bit where there is an investment income or loss, and that could be impacted because the 10-year yield has gone up, so there could be some loss. But anyways, the other income is not a significant driver of earnings in case of the Indian private banks. So the overall, the banks are fundamentally positioned on a very good, on a very strong footing. At the same time, the valuation has moderated, and the valuation of most of these banks look good. Now, this is in a very contrary picture to what is happening in US. In US, the bank's earnings had declined 20% in the last reported quarter. However, in India, we had seen that the banks were actually driving the earnings up. So, this time around, though the cycle is slightly unfavorable because of high inflation and maybe economic slowdown, the banks are very well positioned because of the strong balance sheet.
The big question right now is which bank to pick, because many of these larger names, especially if you look at HDFC and, the HDFC group overall, they have underperformed quite a bit. But of course, largely the sentiment overall has been quite muted for the overall market as well. We're getting specific questions right now on our live feed on SBI and ICICI. You said that valuations are looking attractive. Any of these two names look good right now, or any other that you would like to flag off?
Yes. So SBI looks very good on the valuation basis, despite being the largest bank, and though the earnings have improved significantly with ROE touching almost 14%, the bank is still trading at one-time forward book after adjusting for its subsidiaries. So, SBI looks very good fundamentally. Even ICICI Bank looks good, though we have to watch out how the retail growth pans out going forward in case of ICICI Bank. But having said that, we have seen that the bank has come out of a long hibernation period, and now it is showing a fantastic growth both on the top line as well as the asset quality has improved significantly. So both stock looks good on the valuation front. SBI obviously more because of the valuation trading closer to one time.
Okay. What about NBFCs, Neha? Are the trends going to be similar there as well? Can we see or expect some value being generated in that pack as well? Or is it the core banking area which looks good?
Yeah, so within financial, it is obviously the core banking that looks good, primarily because, the NBFCs have a disadvantage on the borrowing side, borrowing costs are rise. The rising interest rates would not be favorable for NBFCs. Again, within NBFCs, housing finance companies are relatively better placed, but again, if the cost of borrowing increases, that could have impact the margins. And and the smaller NBFCs would definitely, will have some tough period going ahead because of the economic slowdown and because of also the stringent regulations that RBI has brought about, trying to bring the NBFC regulations at par with banks. So NBFCs are not very well placed as compared to banks. There could be some selective stock picking, especially in the housing finance names, which is a relatively safer asset class.
Okay. In the last 1 month, Neha, Nifty Bank was up slightly more than 4%, while Nifty 50 index was up close to 2.7 odd percent. If let's say today and for the next few days and weeks, this turbulence, this uncertainty continues, are there enough triggers in place over the near to medium term for banking space to continue their outperformance?
Yeah, so the banks, as I said, just because they are placed fundamentally very well, the outperformance might continue. Also, if we look at how the Nifty banks, the index is composed of, it mainly consists of the large private banks, mainly Axis, ICICI, HDFC, and Kotak Mahindra. All of them are very well placed. SBI also is doing well. So, the Nifty banks could outperform. Also, we have seen that the index heavyweight, which is HDFC Bank, has significantly underperformed the Nifty and Bank Nifty in the past 6 months, 1 year period. And this is more to do with the uncertainty related to the merger and the market anticipating some increase in the regulatory cost. However, we need to also remember that in a cycle where there is economic slowdown and there is a lot of uncertainty, quality and defensives tend to outperform. So within the banking space, though banking is cyclical, the banks like Kotak Mahindra, HDFC Bank are relatively high quality names, and they might not fall significantly with the market going ahead. So they will tend to outperform. So yeah, the outperformance in the bank Nifty could continue also. Once we get into the next earnings seasons, the numbers again are anticipated to be on a strong side. So that would also support the price levels.
Okay, all right, Neha. Thank you so much for joining in and helping us understand the big trends playing out in the banking space and the stocks as well that we at MC Pro continue to like. Okay, let's talk technicals. Shrikant Chouhan from Kotak Securities is here with us to talk about markets and specifically today's trading session. Shrikant, it looks like it's going to be a very turbulent ride. The cues are not looking good. Tell us what to expect.
Yeah, good morning, Karunya. Good morning, everyone. I think, no doubt that the way US markets have fallen since last 2 days and today again, US stock futures are trading lower. Asian markets are down more than 2% and 10-year bond yield is around almost 3.20, which is the highest point of the current move. One thing is very clear that we are going to see a major decline in the market. But close to 15,900 or 15,800, the market is having very good support. And whenever the market has fallen to these levels in last 6 months, we saw a smart recovery in the market for our markets especially. So what is important is 15,700 in the current week. Till the market is not closing below the levels of 15,700, we are expecting market to rebound after hitting the levels of 15,900 or 15,800. On the higher side, the important level is 16,200. But yes, today, after opening to the levels of 15,900 or 800, we should be buyer in select stocks.
Okay. What about Bank Nifty? We were just talking to our banking analyst as well about the big trends playing out. But overall, anything interesting within the banking space that has, that stands out for you?
I think, the way there is selling in the market from FIIs, bank stocks are finding a lot of difficulties to sustain at higher levels. Whenever we are seeing any rebound in the market, we are seeing sell-off from the FIIs and eventually the Bank Nifty closes lower. But yes, if we compare Bank Nifty with the Nifty, then it is relatively outperforming. And today also, if we see furthermore weakness in the market, then the chances of hitting 33,500 or maybe 33,000 would turn bright for Bank Nifty because there the Bank Nifty is having excellent support. Till the Bank Nifty is above the levels of 32,000, we can expect some range-bound sort of activity. And if there is a medium to long-term view, then certainly we should look for adding good companies, very strong and large cap bank to our positional portfolio because most of them have fallen vertically to their important support areas. Most of them are rebounding after hitting their important support. So if we see they are again falling to the same levels, then we should be buyer.
All right. A lot of questions coming our way as well. Let's talk about Vedanta. Arun Srinivas has written to us and wants to know your view on this particular counter. Earlier part of the May month, Vedanta did climb to that, above 400 levels, but it has retreated a fair bit, more than 100 points, more than 100 rupees off on Vedanta's counter already. Do you see this downtrend continue or is it a good time to perhaps start buying into Vedanta?
Yeah, I think currently the stock is very close to its long-term support area of 290, 295. And in the past, whenever the stock has fallen to these levels, we saw some recovery. Today also, maybe after the weakness in the world markets, we are going to see the same levels, but close to 290 or between 290 to 280 levels, we should be buyer if there is a medium to long-term view. If there is a further more weakness in the market and if we saw like the market is breaking the levels of 15,700 on Nifty, then we can expect further more weakness. But otherwise, I think the stock is very close to its long-term support levels, and we should be buyer if there is a medium to long-term view.
In fact, there's some corporate news as well coming in for Vedanta, which could keep the stock in the limelight today. They've inaugurated international iron ore operations through its subsidiary Western Cluster in Western Africa. In fact, they've already signed a mineral development agreement with the government of Liberia for 3 iron ore mining concessions. So this is an update coming in as far as the corporate developments are concerned, and Vedanta definitely a stock to watch out for. In fact, IIFL also I'd like to pull up. British International Investment has offloaded 1.6 crore shares there, and their standing, or rather their shareholding now stands reduced to 3.56% versus 7.77% earlier. So it's a significant chunk of stake that they have trimmed in IIFL Finance. Max Life, Nomura, these are essentially some buyers for some of these shares of IIFL Finance. But let's talk about the chart for IIFL. Shrikant, do you have any observations here?
Yeah, I think purely based on technicals, the stock is forming higher top, higher bottom series. And on Friday, the stock moved to the levels of 360, 370. I'm to say there was rally in the stock along with volume. So one thing is very clear that the stock is heading upward to the next important levels of 400. And there the stock is having ultimate resistance, because in the year 2016-17, when the stock was rallying, it was around 400 levels. From there, we saw sell-off. This time also, the stock is going up gradually towards those levels. So the very high chances of hitting 400 levels in the near term.
Okay. Another stock that could be in the limelight is Krishna Institute of Medical Sciences. Again, some bulk deal action has taken place. Mirae Asset MF has bought 1.1 lakh shares in the company, and now their shareholding has increased from 8.1% before to now 8.2%. So about 0.1% stake is what they've added to. Krishna Institute, a fairly recent listing, a share that had garnered a lot of attention when it came to the markets. In fact, till May 31st, I guess 30th, 31st, Shrikant, the stock was trading quite comfortably above that 1300 level, and it has cooled off quite a bit from there in the last 1 week, 10 days. Is that a trend that you foresee going forward as well? Could there be further declines?
I think nothing is happening at current levels, because the stock is in the range. It is not breaking the levels of 1130, 1150 on the downside, and 1350, 1370 on the higher side. So I think it is going to spend some more time between the range. But I think if there is any correction in the near term or in next maybe few weeks, then certainly we should be buyer in the company, because all these companies should do well in the long run.
You know, one stock that we keep getting a lot of queries for is IRCTC. And today Pramod has written to us. He's asking your view on IRCTC because he wonders why such a fundamentally strong stock is in a bearish mode. So a very valid question. Talk to us about the trends that you see on the technicals.
Okay. See, like technically the stock is trading below its crucial level of 700. It was holding around 700, 740 for a longer time. But after this particular weakness in the market, we saw some gradual decline in the stock. And now the stock is quoting below the crucial important support levels of some 650, 640 sort of levels. So from here, the stock can fall to the levels of maybe 600 or 590. And the other reason for which the stock is falling is because there is always expectations from maybe the investors or retail investors that the company may come out with some OFS. That's the reason the stock is under pressure. But technically also the stock is under pressure, and we are expecting stock to move towards 600 levels. If there is a medium to long-term view, then certainly it's a buy. But if there is a short-term view or trading view, then we should stay away from taking any position at current levels.
Okay, all right. I hope the viewers are taking note of that. Manish KS wants your view on Nifty metals. And, you know, it's been a very volatile, very unpredictable ride for the metal space this year. Specifically in the last 2 months, there has been a fair amount of downtick as well. So what is it that you predict for Nifty metal index?
See, the Nifty metal index is following to the pattern of Tata Steel. And Tata Steel was above the levels of 1000 for a longer time, but now the stock has started trading very close to those levels. In fact, it has broken that level in the previous fall. Similar sort of pattern is in the Nifty metal. And here also, it is struggling somewhere close to 5,200 levels since last almost a year. But after the specific dismissal below the levels of 5,200, we can expect furthermore decline towards 4,700 or 4,750, which is the 40% retracement of the entire rally. What I mean to say is that if the stock corrects to the 40% of the entire rally that it displayed during the from the starting of the pandemic to the end of the rally, I think there the buying should emerge. I think from current levels, still there is a scope of 7 to 8% fall.
Okay, all right. We have time for one quick query then. Shiv Prasad wants your view on HDFC Bank. He is asking, can it outperform short or long term as post-merger announcement level of 1650 to 1700? Now, of course, today we've done a fair bit of discussions on banking stocks. We've covered SBI, ICICI from a fundamental standpoint. Let's talk about HDFC Bank as well. And Shrikant, if there's any other banking name that you'd like to flag off.
Sure. I think all these bank stocks, especially large cap bank companies, which are having very good fundamentals or strong fundamentals or management, they're definitely going to do well. But in the near term, because of this worries on the inflation side, we are going to see range bound sort of activity or some gradual decline. And maybe that's the reason every time whenever we are seeing any rebound in all these banks, we are seeing some sell-off also. All these banks are reacting to their previous lows, and the previous low for the HDFC Bank was around 1270, 1280. Today, if we see any further more weakness, then the possibilities of hitting 1300 or maybe 1290 would turn bright. There, the stock is having very good support in terms of technicals. If there is a medium to long-term view, and if really somebody want to buy with a view of next 12 months, then certainly it's a buy. If there is any correction in next few days, even at current levels, it's a buy. And we are expecting stock to move towards the levels of at least 1500, 1550 in next maybe few months. But if we go through with other stocks, then in that particular basket, we like Canara Bank, which is currently trading around some 207, 208. The reason behind we like this stock is it is relatively outperforming to other banks. It was around 215. It is currently at 206, 207. Maybe it may fall to the levels of 200, 201. There the stock is having very good support, and technically we are expecting stock to move towards at least 250, 260 in next few weeks or months. So it will take time. It's not a very short-term bet, but if there is a medium to long-term view, then certainly Canara Bank is also a bet to buy and hold.
Okay, any other stock recommendations before we let you go?
A few agrochemical stocks are really doing well, and they are finding a lot of buying support whenever there is a correction in the market. Especially we like United Phosphorus and Tata Chemicals, as well as Sumitomo Chemical. These are the stock on which we should focus, and we should be buyer if there is any correction with a medium to long-term view.
All right, Shrikant, pleasure chatting with you as always. Thank you so much for joining us. Today is going to be a very exciting day. Let's see which way the markets settle, but at least the open is likely to be gap down from what the indicators are in the early trade. But that's all we have in this edition of Morning Trade. But stay tuned. Markets with Santo and CJ comes up right after the show.